What's up guys, welcome back. I'm Kenny, and in today's episode, I want to break down Jumia Technologies and why I think it has a great chance of doubling in the next few years. Now, if you haven't heard of Jumia, it's an online marketplace similar to Amazon or Mercado Libre. Now, it's primarily targeting African countries, however, it is headquartered in Germany. Now, Jumia has been coined the Amazon of Africa, and for good reason, as it's become the leading marketplace over there. Now, the reason I want to look into Jumia today is because I believe that if we get in now and the company does execute on its further growth plans, it could be a huge multi-bagger in the long term. Now, there are a few red flags that I want to go over in this company. However, I do think the long-term growth prospects for this company are looking really good. As we've seen with many other online marketplaces like Amazon, Mercado Libre, and C Limited, shareholders have done really well in the past decade. Now, I believe Jumia is really in its early innings of its growth story, and if it is able to drastically change its business model and is able to execute on its further goals, I believe this has a really good potential. And with that, without further ado, let's dive right into what Jumia is all about. So Jumia's mission is to leverage technology to improve everyday life in Africa. So they do this by providing new services, by delivering innovative, convenient, and affordable online services, enabling SMEs to grow, or small and medium enterprises. And Jumia takes the entire African economy online, helping these small and large businesses grow and reach new customers. And they help create sustainable impact by creating jobs and skills that empower a new generation in Africa. Now, Jumia is currently the leading pan-African e-commerce platform, as it has the Jumia Marketplace, Jumia Logistics, and Jumia Pay. As you can see, they all fall under one brand, Jumia, and offer a single sign-on and full integration. So you're able to do anything from buy a smartphone to shoes, groceries, recharge your data plan, pay your bills, and even order a pizza. And that's really just scratching the surface of some of the product offerings that they have. Now, they have 6.7 million annual active customers, which is still very low when we compare it to other companies such as Alibaba, who has over 300 million monthly active users. So we can clearly see Jumia is still in its early innings. Now, it has over 110,000 active sellers, over 1 billion GMV, 28 million orders, and 34% of the transactions are done through Jumia Pay. So their integrated ecosystem is geared towards driving customer engagement. So you can see on the top half, they have physical goods, and on the bottom half, they have different services. Now, they're saying that they have a strong value proposition through broad product offerings and service offerings. By increasing relevance to customers, it helps increase customer engagement, which in turn increases customer lifetime value. Now, we can see that Jumia is currently touching about 9 different countries all throughout Africa, and Jumia's footprint is 600 million people, which is 70% of Africa's GDP and 70% of Africa's internet users. Now, Jumia provides a diverse offering of products and services, and we can see the breakup of the different items sold by product category as of last year. Now, fashion takes up the biggest chunk of this category, as it takes 20%, with digital services coming up next with 13%, phones with 12%, home and living 12%, and the list goes on. Now, they have 40 million live product listings, 90% of their items are sold by third-party sellers, and as we mentioned earlier, it has over 110,000 active sellers. So we can see that Jumia Marketplace has Jumia Logistics on the back end to help deliver these packages, and Jumia Pay to help customers be able to pay through digital currencies. Now, not only do they have reputable brands on their site, but they have local sellers and cross-border sellers as well. Now, Jumia is really trying to become the #1 destination of choice for brands in Africa. Now, they just threw the Jumia Brand Festival in September 2020 with 200 different participating brands, and they have something called the Jumia Brand Festival, and this event in turn helped translate to 70% increase in orders versus a prior 6-week average, and had 80% of the fashion beauty total items sold. Now, Jumia is really trying to become this leading marketplace by delivering a superior localized experience to customers. They say by offering selection, price, and convenience, local language, local currency, product quality, local and secure payments, and fast and reliable delivery really sets them apart from other competitors. Now, Jumia's brand is really strong as it's well recognized and highly trusted over African online shoppers. We can see that 78% of online shoppers bought Jumia over the past 12 months. 88% of Jumia shoppers said that they repurchased from Jumia over the same year, and 89% of Jumia's shoppers would recommend it to a friend. With any company, you like to see customer satisfaction, and to me, it's really good to see that there's a lot of people who like using Jumia. Now, outside of their own customers, 74% of respondents who are non-online shoppers know about the Jumia brand. There's very high consideration, with 62% of these shoppers would consider using their service over the next 6 to 12 months. Now, we can see that Jumia is seeing strong repeat purchases across all their different cohorts. However, their average order value is going down. Now, Jumia believes that their logistics service is a technology and data-driven answer to Africa's challenges. Now, one of the main problems with African logistics is that there's not that many addresses, and it takes a lot of time for these different deliveries to be able to find the customer. Jumia is really trying to solve this problem through a broad set of proprietary data and technology tools with their extensive partner network, as well as their wide physical presence. Now, Jumia's logistics claim to be a scalable, asset-light, and key competitive barrier. 92% of deliveries are with fully integrated partners, and they're very asset-light with only 6% of PPE of total assets. We can see that they have a very similar logistics model similar to Amazon, as they have warehousing, inbound deliveries, all the way to tracking and return handling. So not only is Jumia hitting on the logistics business, but they also have Jumia Pay. And we can see that e-commerce is a strong driver of online payment adoption. Now, Jumia Pay is uniquely tailored as a payment solution for Africa, as they have multiple local payment methods. They can seamlessly integrate it in the shopping experience, and they have a dedicated payment app. Now, Jumia Pay truly has the potential to become the leading Pan-African payment and fintech player. Now, on the digital and financial services marketplace side, they're able to connect different sellers to customers to financial institutions, and they offer different financing, credit score, wealth management, and insurance. On the other side of things, they have payment services for third parties, for both online merchants and offline merchants. I really like this focus that Jumia Pay is really trying to be a big fintech player. And it's really attractive to me to see that not only are they trying to focus on the marketplace and logistics side of things, but they're also trying to work on the fintech, which is still in its infancy in Africa. Now, as we talked about before, Jumia says that its technology platform is custom built for the needs of e-commerce in Africa. So Jumia is really trying to empower all these different small and medium-sized businesses by giving them the technology to be able to deliver their goods. Now, Jumia is really trying to stress to us that it's not only an online marketplace, however, it's a data warehouse company. Now, Jumia believes that all this data that they're getting would help translate to better insights that benefit the whole entire ecosystem. Now, as we've seen with other tech companies, data has become such a goldmine for them to be able to not only gain actual insights and to understand how their business is running, but to really push their business strategy forward and to really understand the back end and the numbers behind it. Now, Jumia's financial strategy is a balance of 4 key pillars. They want to grow profitable usage. They want to develop their Jumia Pay. They want to reduce cost efficiencies. And they want gradual and diversified monetization across all their different products. Now, Jumia believes that the key initiatives that they launched a year ago are actually starting to pay off. Now, they're seeing a business mix rebalancing, as last year they saw 56% of their GMV in phones and electronics. However, this year, as of the third quarter of 2020, it was only about 43%. Now, on the operational efficiency side, they're seeing continued rollout of new tech features, which helps yield fulfillment cost savings. They saw a 20% year-over-year reduction in fulfillment expenses. And not only that, but they saw record marketing savings, as they saw a 55% decrease year-over-year in the reduction of advertising expenses. Lastly, they exited 3 different countries that were not as profitable, and they saw a 24% year-over-year reduction in general and administrative expenses. Now, I think it's really important to actually dig into why they're exiting these different countries. So clearly, these companies were probably not profitable and not helping them all that much, which does bring up questions on why different countries in Africa wouldn't adopt Jumia. Now, one of the key milestones that they brought up was that in the last quarter of Q3, for the first time, they reached break even before G&A costs. So we can see last year in Q3 of 2019, they had a loss of about 15 million. However, in Q3 of this year, they saw an increase of a positive 0.4 million. Now, this is a huge milestone for them, and the main reason was because they were able to have better operational efficiencies, and they believe that as Jumia continues to grow and gain revenue, their profit would be able to grow as well. So the unit economics continue to improve as they draw smaller sized, more profitable orders. Now, their average order value went down 24%. However, their gross profit per order went up 29%. Now, we saw that their marketing expenses actually went down about 53%. And with that, it translated to a reduction of 47% of their adjusted EBITDA loss. Now, as we saw in 2019, Jumia saw increased EBITDA loss. And I think that's really what spooked investors. However, as of 2020, they've actually been decreasing their net loss by 10% in Q1, 26% in Q2, and 50% in Q3. All this progress was achieved with limited to no tailwinds from COVID-19. The impact of COVID-19 didn't help their business at all. It actually negatively impacted their business, as they saw nationwide lockdowns in 4 other countries, which represented 24% of their addressable market, and they saw localized lockdowns and partial curfews, which helped stifle smaller to medium-sized businesses, especially restaurants, and Jumia definitely felt the brunt of that. So I think this is a really important topic to actually bring up, as a whole bunch of other e-commerce companies benefited greatly from this stay-at-home and this lockdown. However, Jumia, as an e-commerce company, did not see any benefits, and COVID actually hurt them. Now, what this really tells me is that Africa is still way behind in its online e-commerce adoption. Many people don't have the different technology or the resources to be able to shop online. And I think a lot of the problems with Africa is that the logistics is really difficult to be able to send different packages. Now, this is definitely a red flag, but I do think they are doing a pretty good job of focusing on their profitability as of this point. Okay, so now I want to quickly go over their third quarter 2020 results. And this saw significant progress on their path to profitability. The gross profit increased by 22% year over year. Their operating loss decreased 49% year over year. And Jumia Pay's total payment volume increased by 50% year over year. However, if we take a deeper dive, their GMV, which is their gross merchandise value, was 187 million franc, down 28% year over year. As the effects of the business mix rebalancing, initiated late last year, continued playing out during the third quarter of 2020. So in other words, it just really means that their shift from being a first-party seller to being a marketplace for third-party sellers is still currently undergoing its transition. So we can see that in the past 4 quarters, they've been beating their consensus EPS. Now, taking a look at the graph of their annual financials, we can see that they're significantly losing a lot more than they are earning. Now, additionally, in the past 3 years, they had wider losses than their total revenue. It had a drastic drop-off of the first quarter of 2020 because of the COVID pandemic, and from then on, it never really recovered in their total revenue. However, their earnings are reducing, and it's seeing a gradual decline of their losses. Now, taking a quick look at their current valuation, Jumia stands at about a $3.5 billion market cap. Now, we can see just 3 months prior, it was only sitting about $650 million. And if you look at its price of sales, it's currently around 18. However, just 3 months ago, it was only about 3. There's been a lot of positive optimism in the stock. And I think a lot of investors are really excited about its future prospects. However, after this huge run-up, it really worries me that getting in the stock now kind of just feels like FOMO, and I would rather just wait on the sidelines to see where it trades in the next few months before I buy in. Now, just taking a quick glance at their income statement, we can see that each year they've been increasing pretty substantially. In 2017, they saw about 93 million on top line revenue. In 2018, they saw about 130 million. And in 2019, they saw about 160 million. Now, if we go down to their net income, we can see that they've had widening net losses year over year. In 2017, they saw a negative 161 million. In 2018, they saw a negative 170 million. And then in 2019, they saw a negative 226 million. So from everything that we've seen, it definitely looks like Jumia is executing on its plan to profitability and to focus on its other growth initiatives. Now, with all that being said, I think it's equally as important to look at the bear case and why people are saying to not invest in Jumia. Now, the first thing that people bring up is that unlike other regions, the pandemic tailwinds for Africa's e-commerce sector have been minimal. This was evident from the company's third quarter results. And sure, part of this disappointment was due to the company's shift towards being a marketplace business model, But even accounting for this, growth wasn't really much to write home about. Secondly, the continued impact of the pandemic adds yet another hurdle for Jumia to climb. Major continental economies like South Africa are still trying to recover economically from COVID-19. And with concerns that the new vaccines may not be enough to combat recently discovered variants, it's questionable whether things will materially improve in 2021. Lastly, one of the major risk factors is that Jumia just put out an at-the-market offering of about 7.9 million shares in late November, which didn't stop shares from rallying even further. Given that Jumia currently trades at a price of sales around 16, much of the potential is already priced in. So splitting the pie more will further hurt the chance for long-term gains. Alright guys, well that was my breakdown of Jumia Technologies. Now I believe Jumia has a lot of good potential as it's already become the leading e-commerce platform in Africa. It also has a fintech payment service named Jumia Pay, which would really help bolster its business and help other people be able to spend on their website. Now, Jumia is really at a big inflection point where they're trying to change their business model from being a retail business to a logistics business. Now, I believe that this business strategy could have a lot of big benefits for Jumia. Now, the first benefit is that if they are able to get a lot more third-party suppliers on their site, it'll be a huge societal shift for African businesses. A lot more businesses would move to e-commerce, and Jumia would really be the leading place for them to do so. They would also have to spend less on advertising and sales, and as we talked about earlier, they saw a drastic reduction in advertising and sales marketing expenses. Furthermore, Africa is a market with a lot of different logistical challenges. Now, there's two big challenges, the first one being digital payments, and the second one being shipping. Now, Jumia has its fintech service, Jumia Pay, as well as its own logistics network. With their plan to divert away from first-party sales to more third-party sales, Jumia can really spend a lot more time and focus on getting these up to speed. It can really focus on getting its Jumia Pay into a lot of different customers' hands, as well as bolster its logistics network, which in turn would only help bolster its economies of scale and also widen its moat from other different companies. Last but not least, a logistics business would be able to scale a lot quicker and a lot faster than a retail business. Now, Jumia's marketplace is already built. As it onboards more sellers, they'll be able to get a lot more repeat purchases and they'll be able to have a lot more economies of scale as they don't have to deal with variable expenses and hold a lot of different product costs. Since they're not selling the products directly and they're only connecting the suppliers to the customer, they are able to get a lot better operating margin, which in turn helps with a gross profit. Now, this is really a game-changing move for Jumia, and I believe if they are able to execute on their plans, they could really have a great growth story ahead of them. Now, as we talked about earlier, their growth rate did take a hit, which definitely spooked a lot of investors. Now, I believe it's really important for Jumia to do this now, as the African e-commerce sector is still in its really early innings. Now, if Jumia is able to capitalize on this, and we do see a lot more sellers moving to their marketplace, I believe Jumia has the potential to be a next 10-bagger. Now, with Jumia trading about 18 times sales, given its growth rate, it looks a little expensive. However, as we've seen before, Amazon was expensive when it was in its early growth innings, as well as other companies. If you have the foresight and believe in this company, I think this could be a great time to pick up shares. Alright guys, well thanks for sticking around for my breakdown of Jumia. I'm really excited about this company, and I do think its growth story is really strong. I'm definitely going to be adding this on my watch list, and on any big dip, I am going to be building a position in it. Let me know what you guys are going to do in the comment section down below. I would love to hear your thoughts on Jumia and where you think the stock price can go. Now, if you guys like content like this, you can go ahead and hit that subscribe button, turn on the bell notification, and smash that like button for the YouTube algorithm. Alright guys, thanks for sticking around, and let's go secure that bag.